Hello guys and welcome to the Import-Export Hub channel. I'm Bogdan and let's start with the import-export news of the week. But before we dive into the news, the quiz question of the week. So who is the third largest importer of honey in the world in terms of value for 2020? And the options here are Japan, China and the United States. And the correct answer is Japan, with more than $173 million worth of imports for 2020. Now let's move to this week news and begin with the news coming from the US Department of Agriculture, who project that total exports of bulk commodities and meat will reach record levels for both volume and value in 2021. On the bulk commodity side, the drivers are corn, soybeans, of course, and sorghum. On the meat side, the drivers are beef and pork exports in terms of value, and broiler meat in terms of volume. The US Department of Agriculture trade forecast for farm exports is projected at $164 billion, with an increase of $28 billion in absolute terms and 21% in relative terms, which will be a record for the United States. The previous record was set back in 2014 with an exported value of $152 billion. So good news for the US farmers and the US economy. And guess who is the main export market? And exactly, it's China. Guys, I've said it in one of my previous videos. China is importing like crazy since the beginning of 2021. And I think that for business involved in commodities trading, this is surely a good time to be in business. Anyway, good news, as it seems that the US-China trade war seems to somehow lose momentum. Now moving on to the next news, and we see that Incheon Seaport Corporation from South Korea is opening a new shipping route from Incheon port in South Korea to Cat Lai in Vietnam, calling several ports along the way in China and Thailand. There will be 3 vessels deployed with a capacity of approximately 1,500 TEUs each, having a weekly frequency. Now, it's hard for me to say at this point if this type of activity is the result of the Vietnam-South Korea Free Trade Agreement, or if this is the result of a more regional sourcing strategy that the companies from South Korea are starting to deploy in order to somehow reduce the vulnerabilities of a long and complex supply chain. But my guess, at least in this case, is that this is the result of both drivers. So both the free trade agreement and the more regional approach in terms of nearshoring and why not reducing the long and complex supply chains for companies in South Korea. Anyway, I think that this trend will continue, especially in Asia and Southeast Asia, and I expect that other big players in the shipping industry will enter or will pay even more attention for this region. At least this is my opinion, guys. The next news is related to what is happening right now on the market in terms of capacity towards Northern Europe from Asia, as shippers are desperate for more capacity and to some extent, if you ask me, for more diversification in terms of the choice of carriers. And this is where CU Lines, Chinese intra-regional carrier, enters into discussion, as it confirmed the introduction of a new service called IEX, which will be the first one open independently and separated from the main east-west trade routes from the 3 alliances. Now, don't put your hopes too high, as the service will add around only 2% in terms of capacity for this trade lane, and it's little, I know, but from my point of view, this is really an important thing, as CU lines will test the waters, and most importantly, if they will manage to grab some clients from the traditional carriers, so from the three alliances, maybe they will realize that this trade line will become a reliable and stable service. As for profitability, my guess is that the profits will be thin, even with the current freight rates, as they will deploy vessels between 2,700 and 4,400 TEUs. And they can compete with the bigger ones, so from 12,000 TEUs and more, deployed by the three alliances, who clearly benefit from the economies of scale. Anyway, I think that this is a breath of fresh air, as small and medium shippers really needed a service like this. The next news, it's coming from United Kingdom, and it seems that China surpassed Germany as UK's biggest import partner, and it seems that the big driver was the Chinese textiles, non-woven materials, if I'm not mistaken, used for face mask and personal protective equipment. Now, don't fool yourselves and think that with Brexit, the United Kingdom cut its ties with the European Union in terms of commercial activity. And yes, UK is very busy these days, as it's working on securing new free trade agreements. But even if all these free trade agreements comes to place, it's hard for me to believe that they will grab too much market from the traditional UK importing partners from the European Union. Anyway, what is more interesting, and this should really interest the policymakers from the United Kingdom, is the fact that according to this article, the companies from the United Kingdom that were involved in exporting said that the biggest challenge for exporting was the Brexit effect and not the COVID-19 pandemic, at least in the last 3 months of this year. So clearly Brexit affects a great deal the UK businesses, and not only, and the current situation with the freight rates surely doesn't help them very much. Moving on to the next news, and this time it's about cherry exports, as it seems that the exports are rising in value while falling in volume. Anyway, I won't insist, as you have the link for the article in the description, but I think it's worth mentioning which are the main export markets for the US cherries. And we have Canada with $143 million worth of exports, and it's a 19% increase compared to 2019. Another big importer is South Korea with $124 million worth of exports, and China on the third place, who imported around $64 million. Other important markets for the US cherries are Japan with $37 million and Hong Kong with $22 million worth of imports from United States. So again, some good news coming from the agri sector from the United States. So keep up the good work, guys. And we stay in the fruit sector. This time we move to another continent, Africa and Kenya to be precisely. And the star of the show is avocado. It seems that the farmers in Kenya understood the benefits of growing avocado, and this crop is not new to Kenya, but it seems that it didn't reach the true potential of commercial farming. The article puts into perspective Kenya's export potential of avocados if the right conditions are met in order to benefit the avocado farmers. And when I'm talking about the right conditions, the article focuses on quality, traceability, and sustainability protocols. Anyway, don't be fooled. I know that this is an article coming from an avocado grower and exporter, but it doesn't mean that the information presented here is not valuable. On the contrary, if you ask me, as I found out that by 2030, half of the world's fresh produce will be consumed in Asia, and this should really tell you something, guys. So if you're in the fresh produce sector and active on the international market, more precisely exporting, I think that you should already try to diversify your market and access the Asian one if you didn't do it already. Okay guys, that's it for today. I really hope you've enjoyed this video. Don't forget to comment below and of course push the like and the subscribe buttons. Thank you, and until next time, keep your business safe. Thanks.